Today I'll be reviewing Credible, a loan marketplace that allows you to compare up to 11 different lenders with a single application. None of those 11 lenders will actually be credible because they're not a lender. They're just a service that connects you with lenders who might be interested in providing you with a loan based on the information that you give in your application. In your application, the information you give forms a kind of resume. And in that resume, you're sort of auctioned off to a list of different lenders. In this particular auction, Credible is the auctioneer. The lenders are the ones bidding, and you, my friend, are the product. This might not be as bad as it seems, because in theory at least, the lenders are competing for your business, so they should be driving down each other's rates in order to provide you with the best quality loan that they can. So in order to become the prized item in this auction, you're going to need a few things. And the first one is you're going to need to be looking for less than $100,000, because that's the most any of their lenders will provide you. The second thing you'll need is a fairly good credit score. Credible starts lending at about a 640 credit score, but in order to have a competitive application, you need at least a 700. If you also have a reasonably good education, like a bachelor's degree or higher, a pretty solid income, like over $60,000 a year, and a very low debt-to-income ratio, like 20% or lower, you should have a very competitive application. If you have all that, and you do end up getting an offer from Credible, the interest rate will be between 4.99 and 35.99%, and the loan term should be between 3 and 5 years, typically. Here's the full fact sheet on Credible. You can pause the video here if you'd like to see all the statistics. Today I'm going to tell you what's good and what's bad about Credible, and in the end I'm going to give them a rating. If you'd like to hear more about my thoughts on Credible, you can see the link in the description for my full review. Let's start out by talking about the good things about Credible. And the very first thing on the list is the fees. That is, there are none. Unlike a lot of online lenders, Credible doesn't charge any origination fees. Some online lenders, I won't name any names here, but they can charge between 1 and 6% as an origination fee. So if you end up taking out a $5,000 loan, you can end up paying the lender $300 out of pocket in cash just for doing you the privilege of lending money to you. That's steep. The second thing that you have to look forward to is that the application is very simple. They don't ask for any strange information, so everything you should know off the top of your head. And then those things that are a little confusing, they get excellent descriptions. In the application, Credible is interested in figuring out three things about you. The first one, of course, is your credit score. So during the application, they will ask you for your social security number. They're going to use your social security number in order to do a soft pull on your credit report. So this won't actually affect your credit score, but it will help them to determine if you're eligible. They'll also ask you about your income, your housing costs, and then use this to determine your debt-to-income ratio. Now, this is just the number that lenders use in order to determine how easily you'll be able to pay them back. If you'd like to determine your debt-to-income ratio before you apply, we have a calculator link in the description below. So if yours is 20% or lower, you're doing great. If it's 35% or lower, you're still alright. But anywhere above 35%, and you probably will qualify for any debts. We'll also look at a few other details, like your education and where you live, but nothing too intrusive. Your application will be sent out to several lenders, like Payday, and Marcus by Goldman Sachs. These are really good lenders, not sketchy breaking types, but the kind of people who charge you excessive low interest rates. This is really where the convenience of Credible comes in. You're only applying once, but you're applying with several different good quality lenders all in the same place. Each of these lenders is going to weigh the factors in your application a little bit differently. Some may value DTI more than credit score, or vice versa. This is where you'll see the competitive offers begin to flow in if you qualify. It's also worth noting here that one of the lenders that participates in Credible is Freedom Plus, and they're one of the very few online lenders that allows you to use a cosigner. So if you have a friend or a family member who's willing to cosign for you, you might be able to qualify through Freedom Plus where you otherwise wouldn't be able to. Okay, good stuff over. Let's move on and talk about what's bad about Credible. And the first thing, of course, is that credit score requirement. 640 is pretty high. We actually have Credible's approval statistics for 2018 by credit score, and you can see that with 640 or less, they have just a 10% approval rate. Between 640 and 699, that rate jumps to 40%, and 700 plus, you're looking at around a 50% approval rate. So obviously, these guys are targeting the good to excellent credit range. So if you're below that, you're probably not going to qualify through Credible. This is clearly a downside, since 20% of the American population has a credit score below 640. And if that 20% includes you, but you still need a loan, you can use my app called Novita to help improve your credit. If you've ever been interested in credit repair but don't know how to do it yourself, we actually will write you all of your credit repair disputes, write your follow-up letters, and tell you where to send them, all completely for free. All you have to do is sign up, and you can begin repairing your credit in under 5 minutes. It's ridiculously easy. There's a link in the description for that if you're interested in doing credit repair yourself. There's also another potential drawback with Credible that is shared among other loan marketplaces, and it's kind of summarized by LendingTree's slogan, which is, "When banks compete, you win." The idea here is great. The banks are competing for the same customer set, so in order to appeal to the customers, they want to give them the best possible rates. The idea is great. The banks are competing with each other within a marketplace for all of the same customers. So in order to win the customers, they want to provide the customers with the best possible rates. Awesome, you get multiple offers, you pick the lowest one. That's how the marketplaces should work. But is it actually how they work? In reality, the banks aren't really competing for your attention. They're really competing for ranking within the marketplace. And the way that they rank better in the marketplace isn't by providing lower rates to you, the end user. It's by paying more money to the marketplace in order to rank higher. So in theory, your application could qualify you with 6 out of 8 of the lenders, but the marketplace could choose to only show you the highest paying lender. So as a result, you end up paying more or the same amount, but the lender pockets more of the cash from your loan. Of course, I'm not saying that Credible does this. I don't know. But I'm saying that any marketplace has the potential to do this. Even if the marketplace chooses to exclude lenders because their payouts aren't high enough, that's still a form of this. You go to the marketplace assuming you're going to get the lowest possible rate by applying with all of these lenders at once. But what if there are lenders outside of the marketplace who are going to charge you less? You won't even hear about them because this marketplace is claiming you're going to find the lowest rates through them. So it's not always the case, and it's something to watch out for. Don't assume that just because you're applying through a single marketplace that you're actually shopping around. You're not. All of that information could be biased. The last negative thing I wanted to talk about is also shared between all online lenders, and that is a lack of flexibility. When you deal with a real physical bank, you can go in and talk to a real physical person who might be willing to tailor your lending experience directly to your situation. This is a big deal if you want to use collateral through your loan. Most online lenders don't allow you to use collateral, so you end up paying more for an unsecured loan. So you end up getting an unsecured loan, which is significantly more expensive. With the bad stuff over, let's move on to talk about the similar lenders to Credible. But since Credible isn't a real lender, we'll have to compare them to other loan marketplaces. And the one that comes to mind is called paydayloans.com. Now, like Credible, they're obviously not a real lender. And like Credible, they send out your application to multiple lenders who might actually be interested in lending money to you. The main difference between these two marketplaces is that Credible will loan you more money. Credible loans up to $100,000, whereas paydayloans.com provides up to $35,000, so that's a lot less. Where paydayloans.com starts to shine is their credit score requirements. You can borrow money from them with as low as a 580 credit score and be reasonably competitive. They say that any credit score can apply, but you probably won't be accepted. And with a score that low, you're really only going to qualify for $1,000, but if you really are in a pinch and need money, at least you can get something. Lending to lower credit scores does come with some cost, and that is that they can't lend in as many states. New York State, for example, has usury laws that prevents lenders that lend through paydayloans.com from charging over 60% interest. Now, if you have a 580 credit score, your loan will have an interest rate higher than 16% if it's unsecured. If your state has strict usury laws, you will not be able to get a loan through these guys. The takeaway here is that if you need a lot of money and you have good credit, Credible might be a better option for you. But if you have low credit and you're a little bit desperate, paydayloans.com might be able to help you out. Since both of these marketplaces only do a soft pull on your credit score when you apply, it doesn't hurt to apply to both and just see what comes back. If you've stuck around this long, you're probably interested in applying through Credible. So here's what your application should look like if you're going to qualify. The first thing, of course, is that all-important credit score. You should have at least a 640 and ideally higher than 700. To maximize your chances of success, your debt-to-income ratio should also be quite low, ideally 20% or lower, but at most 35%. And third, you should have a pretty good education, like at least a bachelor's degree. Some of the lenders in their pool value education as a strong signal of your ability to repay your loan. On the other side of the spectrum, you probably won't qualify if your credit score is below 640 or if you already have a lot of debt. The bottom line is that Credible is one of many really good online options for borrowing money, but they do have pretty steep application requirements. If you are already a really good applicant, as in high credit score, low debts, high income, you're going to end up with a competitive rate from Credible, but you could also get a competitive rate from almost anyone else. So they aren't really pushing the envelope that far. The place where Credible really shines is just making your application experience easy. They make it easy to apply with multiple lenders at once. If you do decide to borrow through Credible, be sure to go directly to the lender that is providing you with the loan first, and make sure that you're not getting some kind of a marked up rate because you're using a loan marketplace. That's our last thoughts. Thanks for watching.